We couldn't wait for the SEC to approve. It's been years, so we're just going to drill into the index, which is odd for this segment. But it's interesting because you've heard of the S&P 500. They're trying to do that now with the crypto world. So this is the Bitwise 10, right? So it market cap weights the 10 biggest cryptocurrencies. So this is the index. This is with the SEC. So if it were approved, it would be the first crypto index. I'm sure Bitcoin would probably come first, but this is filed with the SEC. It could be an ETF soon. Let's look at the weightings and see what you get in this index. And you can see anybody who follows crypto is going to go, yeah, that feels about right. Obviously very heavy in Bitcoin, but market cap wise, that is the big one, right? Now let's look at the performance. This is where it's interesting because I think if you go way, way down the road and you think about investing in crypto, some people will like the diversification benefits probably of a basket. So in the case of this year, you're not going to feel all the upside of Bitcoin, but if it goes down, there could be some protection there in that because you're not in a single security. So it is interesting to see this kind of index methodologies being applied to crypto. So Scarlet, if and when this ever gets approved, this will be an interesting product.
Absolutely. Now, still with us is Hunter Horsley and Matt Hougan of Bitwise Asset Management. Hunter, I'm going to ask you the obvious question here. The SEC punting, delaying a decision once again. What's your read on why regulators are still so hesitant?
Yeah, absolutely. So the most recent delay we view as largely procedural. From the initial filing, there are 240 days for the 19B4 to be considered, and that puts the final sort of decision on October 13th. Our filing is currently the first in line, and so I think we weren't surprised by the window extending and the amount of time continuing. The SEC has been pretty open about the things that they're thinking about. They're thinking about custody. They're thinking about the ability for an AP to operate effectively, so the ability to go short. And then they're thinking about the market. So the market's in a mature place where you can trust the access, the liquidity that you're accessing. And what we've been excited by is even though there have been filings, in 2013 there was a filing, in 2014 there was a filing, there's been a huge amount of progress over the last 12 months.
So Matt, you were here 1 year ago.
Right.
I had come out, I handicapped the Bitcoin ETF race, and I predicted that some of the products had a 30% chance of being approved by the end of this year. You said Eric is understating that. It's more than that. I've revised down. I also think the SEC's got PR worries about approving. I'm more 15%. Where are you now by the end of this year, which would include that October decision?
Yeah, I would love to give you an exact percentage, but my lawyer sitting on my shoulder won't let me do that. I will say, look, a lot has happened in the last year since we sat down here. Hunter mentioned this, but things that have happened that are important. Jane Street has come into the market. Susquehanna has come into the market. Spreads have come in. Arbitrage has improved. Now custodians have huge insurance policies from Lloyd's of London. So a lot of the concerns that the SEC had lined up in January 2018 when they articulated why Bitcoin ETFs will need longer review have been solved not by Hunter and I and the rest of the team at Bitwise doing interesting work, although we've filed a lot of reports, but just by the market maturing. So 15%. I guess we'll see.
Your lawyers will be pleased. So good job there.
You know, looking through your suite of crypto indexes, Hunter, there's a variety of options. I see a total market index, a small cap index as well. What do you do with these? Do people license them for separate accounts? I mean, before they actually get made into ETFs, how do you use them? Yeah, that's a great question. So there's some investors, financial advisors, private banks, multifamily offices that we work with who say we want to have exposure now. We're not ready to wait for an ETF at some point. And so we facilitate them investing today through accredited only products. So they operate like an index fund. We launched the first and today the largest cryptocurrency index fund. It's just that they're limited to accredited investors, and so large RIAs or RIAs working with high net worth individuals, financial advisors who have that clientele are able to come in today before the rest of the world gets access.
So I like to look to Europe as an incubator for what a Bitcoin ETF might do. Sweden has 2 ETNs. They actually have a crypto basket ETP in Switzerland, but no one cares. It even has a cool ticker, HODL. What makes you think this will be different?
So I think the key to a Bitcoin ETF in the U.S. is that it unlocks the financial advisor marketplace. So far, crypto has focused mostly on retail investors through things like Coinbase, Gemini, Kraken, or institutional investors through VC investments like Andreessen VC. half the money in the U.S. is managed by financial advisors, and right now it's very difficult for them to access that market. What a Bitcoin ETF would do is the same thing that a gold ETF did, same thing that a private bank ETF did. It would open up these major new areas of the market to a major segment of American wealth, and that's why we think it's both important that one is approved and that there will be real demand once it does.
I want to revisit the gold versus crypto debate because the crypto crowd seems to have shifted to this argument that Bitcoin is a better store of value and even a safe haven like gold. But you look at the price movement, and its volatility is unbecoming of a safe haven.
Bitcoin makes gold look like a money market fund.
How can someone in the crypto world credibly make the argument that Bitcoin is a store of value and a safe haven?
Yeah, I think that's a great question. Look, you have to go back to 1971 when we went off the gold standard, and gold emerged as this new non-sovereign store of value. We had never had that before. People forget because they're not as old as we are, but at the time, gold's volatility was huge. It had years when it went up 30, 40%. It had years when it went down 30, 40%. When you get a new store of value emerging into the market, of course people don't trust it totally. Of course they have to get comfortable, but as they do, that volatility comes down. Last point, Bitcoin volatility seems large. It's come way down in the last 5 years. Used to be 10%, now it's about 4% per day. That will continue to narrow.